Good morning, and thanks so much for tuning in. You're watching Trade Talk. My name is Alex Matthew, and this is BQ Prime. It's the end of the trading week. It's been a curtailed trading week, and we've seen heavy selling across the board in the Indian equity markets so far this week. We'll have to see if that continues. For the Nifty 50, you've seen cuts of over 400 points so far this week, and cuts across the board, particularly in the banking index. Now, all of that is the setup, of course, but there's a bigger story to talk about, and that has emerged overnight, and that has to do with the inclusion of Indian government bonds in the JPMorgan index, the emerging markets index. And this will take place in June next year. There are several implications in terms of capital flows into the country. Let's start with that story, because that could well have a sentimental impact for the Indian equity markets. Of course, it's expected to have a bearing on the government bond yields right at the start in trade today. But Vishwanath Nair is joining in to give us some perspective on why this took so long and what it implies now that it has come to pass. Vishy, morning. What can you tell us about the context and the way forward?
Morning, Alex. It's been a long time waiting. I heard some analysts talking about 2020 is when this discussion had originally started. And since then, this debate has been going on of including India into the emerging market index, especially at JPMorgan, which is one of the more popular names out there. Already we have some of our neighbors, got China, Indonesia, Malaysia, people within the Southeast Asian economies. Some of the larger economies here have already been part of this index, and now, of course, JPMorgan has said that Indian government bonds will also be included. This announcement says that this inclusion is going to be spread over 10 months between June of 2024 and March of 2025. So over time, the expectation is that up to 10%, that's the maximum weight that India will carry. Analysts are already predicting about 22 to 30 billion. It's a wide range, but that's the kind of inflows that people are anticipating because of this inclusion. Remember that investors or managers of investment portfolios so far did not have a reason to buy the Indian government bonds as far as they were buying the other Southeast Asian economies. So now, because of this inclusion, it becomes part of this broader index, and that spurs investment potential as far as the Indian government bond is concerned. In the past, there have been discussions about the Indian government sort of tinkering with the tax structure for the foreign investors. So far, the Indian government has not done any of that. But still, this inclusion is definitely a big one for the bond markets for sure.
Okay. All right. So immediately you could see a bit of a pop. And of course, Lakshmi was speaking to us, Lakshmi Iyer of Kotak was speaking to us a short while back, and she said there could be an immediate sentimental impact on the yields today, but this is something that will pan out from June next year, as you pointed out. And we are going to touch base with a few more experts on this, Vishy, over the course of the day. But just to understand, as things stand, one would assume that this inflow will start when the inclusion happens in June next year. It would obviously have a bearing or factor into the government's borrowing program as well, because of this kind of demand that will flow in.
Yeah, you're right. So there will be definitely an impact within the government's borrowing plan. That surely helps. But as far as the broader markets are concerned, this is something that Lakshmi mentioned, as well as some of the other experts that I've had a chance to speak with briefly, because it's still early in the morning. But what they were saying is that, you will still see a lot more movement within the bond market being spurred because of macro conditions within the country, as well as from a global context. We've had the US Fed this week mention that we're still going higher for longer. So their expectation of a rate cut is getting pushed back further into 2025. And that's FY25, I mean. And that's, of course, going to play a significant role as far as the bond movement yield movement is concerned. Yes, there is definitely going to be a pop, as you said, a short-term sort of a movement within the yield. But then you will see inflation, domestic as well as international, crude oil prices specifically, playing a more significant role as to what the long-term movement within the indices within the bond yields are concerned.
Absolutely. Thanks so much, Vishy, for summing all of that up for us. And a viewer's reminder, this is just the initial setup, and we will be revisiting this over the course of the day to tell you more about the implications for the Indian bond markets as well as for the government's finances and everything else that you need to know about this issue. For now, let's turn to another big story, and this is news from Deal Street. There's a large deal that has just been announced in the pharmaceutical space. Glenmark Pharma selling a 75% stake in its life sciences subsidiary to Nirma. We'll get you all of the contours of that, and we'll also help you understand what it means for all of the parties involved. We're going to be joined by an analyst as well on the show. But first, let's go to Varsha. Varsha is joining in to give us the key contours of the deal. Varsha, good morning. What can you tell us about this deal that has been announced?
So as you rightly said, Glenmark Pharmaceuticals has agreed to sell 75% stake in its life science subsidiary to Nirma Limited for rupees 5,651 crore. Now, Glenmark Life Science report a revenue of 2,161 crore and a net profit of 467 crore in FY23. The company is valued at rupees 7,684 crore as of Thursday's closing price. Now, the pharma company will sell shares of Glenmark Life Sciences at rupees 615 a piece, a 1.8% discount to the unit's close of 626 rupees on Thursday. Now, Glenmark Pharma will own 7.84% after the transaction. The deal is subject to customary approvals and is expected to close in FY24. Now, Nirma will make the mandatory open offer to the public shareholders of Glenmark Life Sciences at rupees 631.20 a piece for an additional of 17.33% stake. Now, that's close to the Thursday's closing price of 627.10 a piece. Now, total consideration for acquiring company stands at rupees 1,343 a crore. Now, Glenmark, its subsidiary, and Nirma have agreed to certain non-compete and non-solicit agreements for a specified period. Now, Kotak Investment Banking acted as the exclusive financial advisor to Glenmark Pharma and its subsidiary, while S&R Associates Tri-Legal acted as legal advisors. And Khaitan and Company, KPMG, and Dam Capital advised Nirma Group on the deal. Now, why is the sale happening? So, company looks to sharpen its focus on its key dermatology, oncology, and respiratory therapies and seeks to unlock value for repaying the debt. Now, transaction helps company to achieve long-term goals, enhance shareholder value, and the stake sale will improve overall return ratio profile. Also, there is no plan to deploy capital, and the goal is to stay net cash positive. And as mentioned, the company's total debt will get extinguished after the deal. Now, Glenmark Pharma has a gross debt of rupees 4,600 crore against net profits of rupees 5,000 crore from the sale. Now, Glenmark Life Sciences is in the business of developing and manufacturing APIs in the therapeutic areas. Also, so normally when two companies does business, so there are strategic advantages involved in this. So will this transaction affect Glenmark Pharma in a negative way? So Glenmark buys less than 15% of its API from Life Sciences subsidiary and plans to become a major API manufacturer itself. So the sale will, however, affect revenue in the short term, but company expect double-digit growth within 4 to 6 quarters. As part of the deal, Glenmark Pharma has agreed to procure API from Glenmark Life Sciences for a period of 5 financial years with effect from April 1, 2024. Also, what are the long-term goals of Glenmark Pharma if we consider? So they target high double-digit CAGR in Europe and rest of the world markets. Also, they want to generate 2/3 of consolidated revenues from branded products, and companies expecting EBITDA margins improvement on account of lower R&D expenditure also.
All right. So quite a lot to take into account here. Varsha, thanks for bringing us those updates. In fact, let's take this ahead with the expert that's joining in, Abdulkader Puranwala, who's joining in from ICICI Securities. Abdul, thank you so much for taking the time, and we've hopefully set the context for this conversation with you. 3 entities at play: the seller, of course, the entity that is being transferred, and the buyer, all 3 listed and all 3 with investors very keen to understand what the implications are. What is your first reading of this deal?
Yeah, hi, good morning. So, yeah, clearly from a Glenmark Pharma perspective, it is definitely going to help them to retire the debt, which as on FY23 fiscal ending was close to 4,347 crores. So, part of this transaction, they will be receiving slightly over 5,600 crores from the 75% stake divestment. Additionally, they There is Glenmark Life Sciences is also planning to declare an interim dividend of close to 22.5 rupees. So net, I believe slightly over 5,800 crores will be the gross inflow to Glenmark Pharma, which would entirely go towards the repayment of debt, and they would turn net cash positive in fiscal 25. So yeah, so quite positive on the pharma side. On the life sciences end, again, they are pretty much safeguarded because the supply agreement with Glenmark Pharma largely remains intact for 5 years. So Glenmark Life Sciences as of now gets close to 30 to 33% of their API revenue from Glenmark Pharma, and that remains intact. Also, the pharma entity will help the life sciences entity to scale up their existing export business, which predominantly was delivered through the platform of Glenmark Pharmaceutical historically. So that kind of an agreement in place, I don't see an immediate impact to the life sciences business as well because of the change in the parentage. Talking about Nirma as a group, quite diversified, firstly, but on terms of pharmaceuticals, they have also acquired, a couple of entities in the past, but the magnitude of this one is going to be quite large as a whole. But the promoter itself being a chemist, I think this transition could be a little smooth. On the life sciences unit, again, it's quite professionally managed, so the transition, should be quite smooth.
Okay. The question then is, with this development, of course, and this is something that is expected to be completed in the current financial year itself, Abdul. Now, for pharma, as my research analyst was pointing out, there is expected to be an implication in the revenue growth, at least for the short term, which could get figured out in 4 quarters' time. All of these developments taken into account, would you change the rating on any one of these counters? Is Glenmark Pharma a better buy at this juncture, considering that it will retire all that debt?
So, we have Glenmark Pharma under our active coverage only, not rated other two names. On the pharma side, yes, the debt retirement will happen, and that will be because of the divestment of what they're doing. So the impact on the top line would be close to 10% cut in what we're building for FY25 on the revenues front. At an EBITDA level, the life sciences unit had a slightly better EBITDA margin. If we check fiscal 23, they had EBITDA margins of close to 30% as compared to 17.5% what the pharma entity had reported on a consolidated basis. So due to that, the EBITDA implication or the EBITDA cut could be between 17 to 18%. Though there would be some cost savings in terms of the interest and the depreciation cost, which would because of the lower debt and the assets which move out gradually. So due to that, the implication on the profits may not be that severe. There is some portion of the minority interest also what Glenmark has been reporting in their books. So net at a profit level, maybe the impact should be less than 3 to 5%.
So your final rating on the 3 counters, do you have coverage on Nirma, for example, and what are your ratings? What are your target prices?
So I covered Glenmark Pharmaceutical. We have a sell rating with a target of 63 rupees. Post this debt divestment, what will happen? We believe the broader trigger for a re-rating to happen here in terms of our estimates and rating change. It would be largely dependent on the way the R&D costs have been managed, and certain news flows earlier were related to the divestment of Equinos. So if that happens, that would be quite EPS accretive, as well as can lead to a potential upgrade in our ratings as well.
Right. Thank you so much, Abdul, for joining in, for giving us that perspective. Certainly has been an insightful conversation. All right. Now, let's turn attention slightly away from the stock-specific action and indeed the inclusion of India in that bond index and talk about geopolitics, because the the back and forth between Canada and India has been going on for some time. There have been developments overnight, which seemingly has complicated the matter even further. To put all of that into perspective and talk about the possible ramifications for the Indian equity markets, Tamanna Inamdar is joining in. Tamanna, good morning and welcome to the show. What can you tell us about the context, the current context, and the way forward possibly?
First of all, great to be on the show with you, Alex. And hello to all of the BQ Prime viewers. Great to be back in these studios and on a big day for the Indian markets. And of course, the big story overnight has been India-Canada once again, because Justin Trudeau, the Canadian Prime Minister, has doubled down on his allegations that there was an Indian involvement in the killing of Sikh separatist Nijjar in Canada on Canadian soil, something that India has denied and said, show us the proof. But he's reiterated these allegations. There have been some noises from the White House as well, saying that, we see you, but let's go ahead with the investigations. Meanwhile, the big question on everyone's mind from the last couple of days, and actually the start of this week, has been, is this going to have an impact on Indian markets? The broad answer is no. In fact, there was a quote on Wires from an Indian official saying that they see no reason for Canadian pension funds to back out of India. It's a better return. It's a long-term investment. And that really is the crux. Everything depends on how Canadian pension funds respond. Now, data shows is about 1.7 lakh crore rupees of Canadian money per se invested in Indian equities. And that doesn't seem to be going anywhere right now. Broad picture, very quickly, Canada accounts for about 0.5% of Indian FDI, so it's not going to move the needle too much at any point. Stock specific, if you have to look at something, then perhaps stocks like Zomato, Nykaa, Paytm, companies in which there is a fair amount of investment of Canadian funds, and that's pretty much it. But obviously, bigger fish to fry in the markets this morning before trade, Alex, and maybe the Canada story is subdued. But you never know. We'll have to see if there's retaliation over the next 24 hours, if at all, to India suspending visas for Canadian citizens.
No, certainly. And in fact, conversations that you had with market veterans, one, in fact, I believe Nirmal Jain pointed out the fact that investors are savvy. Investors know the difference between business and politics. And that has panned out as of now. We'll have to see if that continues. Thank you so much, Tamanna, for giving us that perspective. All right, there you have it. Another big story, but may not be the biggest headline, as Tamanna pointed out this morning. Let's talk about stock-specific action then. And we've got, as usual, a lot of stocks to talk about, a lot of stocks in the news. Himansh is joining in with the first list of stocks. And Himansh, what do you have on your list today?
Hi. So from the broader market as well as from the BFSI pocket, mainly the headlines are investment related. So ICICI Bank, the private lender, will buy 9.99%. So just about 10%, which is where the regulatory announcements or the SEBI has to be informed here at, is going to be taking up 9.99% stake in Quantum Corp Health Private for a stake acquisition of almost 5 crores. The acquisition is expected to be completed by October end. Now, Quantum Corp Health is a healthcare services platform aggregator with services like pre-employment health checks, annual health checks, occupational health centers, and ancillary services for enterprises. The company had a revenue of about 16 odd crores in FY23 and reported a profit of 64 lakhs. Then moving on to LIC, the company decreased its shareholding in Oil India from 11.73% to a little less than 10%. And there has this gradual decrease of over 2% has been over a whole period of over 5.5 years. And the transaction value is based on an average cost per share of close to rupees 260. The company also increased its shareholding in Gujarat Gas from 4.98 to 5.01, which is very marginal. The acquisition of shares was done on an average cost of about 447 a piece. Then we have Canfin Homes, where the board of directors are scheduled to meet on Wednesday, September 27, to consider the issuance of non-convertible debentures for up to 4,000 crores. So this is big, and if it passes through, then it'll be a big move for the company. HDFC Bank has informed that HDFC Limited, the erstwhile HDFC Limited, sold almost 0.18% stake in Hindustan Oil Exploration, and HDFC Bank also post-merger sold a little over 2%. So collectively 2.22% stake sale that we are seeing there. Vedanta, the board has approved raising of 2,500 crores worth of non-convertible debentures. So 1 lakh each and 2.5 lakh debentures that are being issued. Lastly, we have Suntec Realty, where IFC and Suntec Realty. So the World Bank arm is joining hands with Suntec Realty, the real estate developer, to invest up to 750 crores to develop over 12,000 housing units in Mumbai. These are expected to be more sustainable and more green compared to other houses, taking 20% less. So it's a great move for the company, and we'll see how these projects materialize in the coming time.
Certainly. All right. Thanks so much, Himansh, for bringing us those updates. A lot to take into account. But we've also got Saloni joining in with her list of stocks. Saloni, good morning. What's on your list today?
Good morning. So first we've got two cement companies, so Ultratech and India Cement. So Ultratech acquired 74 odd acres of land in Andhra Pradesh from India Cement for a consideration of 70 crore rupees. Then we've got SJVN. So the government will exercise its green shoe option of 2.46% stake or 9.66 crore shares for the offer for sale, given the oversubscription in the issue. So this is in addition to the base issue size of 9.66 crore shares. So accordingly, the total offer size will be up to 19.33 crore equity shares, representing 4.92% of the total paid up equity. Then we've got IdeaForge that received an order to supply 400 surveillance copters with accessories to strategic marketing for a broad consideration of 58 crores, and the time period by which the order is to be executed is 12 months. And lastly, we've got RVNL. So the company has formed a joint venture with Tractors and Towers Infratech to construct a 6-lane greenfield Varanasi-Ranchi Kolkata highway in the state of Jharkhand. So on a hybrid annuity mode, and RVNL's stake in the joint venture is 49%, and the total project cost stands at roughly about 1,270 odd crores.
All right, there you have it. So thanks so much, Saloni, for bringing us those updates. Let's quickly take you through the next and the last part of this show, which is a check on the primary markets. There is a new issue to talk about, and we've got Vaibhav Jewellers that is in focus. And Mika is joining in to tell you more about that. Mika, what do you have for us?
Good morning. So Manoj Vaibhav Gems and Jewelers will launch its 270.2 crore initial public offering today. The South Indian jewelry brand will raise the funds via 210 crore fresh issue and a 60.2 crore rupee offer for sale, which will offload around 28 lakh shares. The fixed price band for the issue is set between 204 to 215 per share. In the OFS segment of the IPO, only one promoter, namely Grandi Bharata Malika Ratna Kumari HUF, will be the sole participant selling all the shares. The proceeds will be used for the capex and inventory cost for setting up 8 new proposed showrooms. About 43 crores are estimated to be deployed in FY24 and 129 crore rupees in FY25. The remainder funds will be used for general corporate purposes. A little bit about the business, also known as Vaibhav Jewellers. The company is a regional jewelry brand that offers gold, silver, diamond jewelry, and precious gemstones. In FY23, gold jewelry constituted 89% of its total revenue. The company operates through retail showrooms and through the website, and serves the economic segments of 2 main states, Andhra Pradesh and Telangana. It has 13 showrooms, including 2 franchisees, and are spread across 8 towns and 2 cities. And one of the main aims of the company is to focus on the rural market, because it identifies that as a substantial contribution for the retail segment. In terms of financials, the company has witnessed a 41% growth from FY21 to FY23, and its EBITDA has almost doubled in this time period, with its EBITDA margins at 7% in FY23 versus 4% in FY21. And furthermore, the company's net profit has also tripled from 20.74 crore rupees in FY21 to 71 crores in FY23.
All right. So another jeweler hitting the market. Thank you so much for bringing us those updates, Mika. And that brings us to the end of this edition of Trade Talk. It's been a pleasure bringing it to you. Lots more coming up in just a bit. Most importantly, there's another chat lined up on the inclusion of the Indian government bonds in the JPMorgan index. Watch out for the implications, not just for the equity markets, but also the bond markets today. Stay tuned. This is BQ Prime.